Greetings, members one and all of the Salivation Nation. Gold ETF purchases to fall sharply, says Metals Focus. Let's explore. A very interesting article that comes to us from mining.com, as shared with me by a member of the community, about ETF purchases of gold. Looks like there's been a shift, a dramatic shift, and we'll see that in the chart below about gold demand, where it's coming from. It's very fascinating to see, and I think in a sense encouraging. This article says here that demand for gold from jewelers and central banks will recover in 2021, but they remain below pre-pandemic levels, while buying of bullion by exchange-traded funds will fall sharply, according to Metals Focus, they said this past Tuesday. Supply of gold from mines, meanwhile, will rise to its highest on record this year, Metals Focus said in its annual Gold Focus report. And we've seen that. You've seen my channel and others cover some of these gold exploration companies that are out there looking for new deposits and doing these studies and to find new gold. And some of them have done very well, very profitable, and have certainly have some very promising results in that area. It also predicted that gold would cost an average of $1,820 an ounce in 2021, which is up from $1,770 an ounce last year. Now again, that's an average. As of now, it's below $1,800, but on Tuesday it was about $1,860. But it is I think going to average out to be at least that, or if not more. My prediction was that it would hit up to $2,000 an ounce again, or at least touch that area. I still stand behind that. There's a lot that could happen this year that can make that occur. It's been relatively volatile. One thing's for sure, the novel coronavirus has transformed the gold market, which is why predicting it has been fairly difficult. So here is the chart that shows global gold demand over the past 10, 11 years. And it is an interesting story and an interesting tale that we can see that the bulk of demand for gold is in jewelry. Next would be on the scale would be bars and coins, and we're seeing that increase over the last couple of years here, especially heading into 2021 here. We're seeing a pretty big jump in gold bars, and then the ETFs, which is the lightest color here, we saw in 2012, 2013, it looks like there was I guess that assumes there's a negative correlation or a sell-off, and that happened in 2014 and 2015, although not as dramatically in 2013. That's interesting. But look at what the central bank holdings are, how much they've increased per year. Well, in 2020, they didn't add a whole lot. They're adding a lot more this year, but again, it's not to pre-pandemic levels. But we can see those holdings, although they are substantial, they are minor compared to the other gold that's out there. Hedging, I'm not sure what exactly that necessarily means, but exchange-traded funds is certainly seeing a steep decline this year. We've not seen this kind of decline since 2018. I don't know why that is, and why there was sell-off points in other periods of time. But it is interesting. Investors last year stockpiled huge amounts of the metal traditionally seen as a safe place to store wealth, briefly pushing gold prices to record highs above $2,000 an ounce. But jewelry sales collapsed, and some central banks, facing economic difficulty, held off buying gold or even sold it. Many larger investors pivoted back to riskier assets as vaccines were deployed and the global economy moved towards recovery, and ETFs, which store gold for shareholders, have shrunk. And keep in mind, there's a lot of derivatives in the ETFs, and A lot of people probably know or don't care about that invest in that space. However, smaller investors buying gold bars and coins have continued to stockpile. That has not changed. So the stackers out there, well, we're holding on because we see and we understand that physical is really where it's at in the long run. Metals Focus saying it expected their purchases to rise to an 8-year high in 2021. An 8-year high. Does it remind you of kind of what things were like 8 years ago, which is around the time when this channel started? People thought, well, hey, we were very close then to some trouble ahead. And though it hasn't happened as some of us thought it would 8 years ago, we are much closer now than ever before to massive trouble ahead. Supporting prices this year will be the threat of inflation, eroding the value of assets and currencies, Metals Focus said. Gold and other commodities are often used as a hedge against inflation, and not only inflation, but economic instability in general, and that includes deflation as well. So it's a fascinating numbers and report, and thanks again to the anonymous member of the community who sent this to me. Very interesting report indeed, and so we'll see. I think in a sense, as more people push into the physical, that's going to put some strain on some of the derivatives around some of these ETFs, and I'm hoping that more of this is happening with silver as well. It certainly is encouraging to see, and I think this is a testimony to what we've been experiencing over the past year, not only with the pandemic, but also the silver squeeze and the great demand, in a sense, for a gold squeeze. And as people continue to accumulate the metal, it puts a little bit of that focus to the metals themselves. The metals focus, and that is what it's about. It's about wealth preservation, and it's about having something of value, a store of value that's in your hand that cannot be manipulated once it's there. Once you understand and know that your gold is genuine, well, you know that it is something that has this history and has value that transcends time and also cultures and epochs, empires, and everything. That's what's the magic. That's what's so special about gold. That's why it has been desired. That's why it's so treasured. And I think that is very apropos, especially in terms of jewelry, as people have jewelry that they know and they can see and interact with for a thing of beauty every single day. And I think part of that is because they know that it is something of value. And so there you have it. Let me know your thoughts in the comment section below. An excellent report here. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you, as I do in every video, to rate, share this video, hit that notification bell so that you can be apprised of the latest video, comment, and really subscribe, because there's a lot of new viewers here that aren't subscribers, and that is probably the best and easiest way to be consistently notified when a new video is released. So again, a multitude of gratitude.